Hello and welcome. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is Thursday, August 13th, 2020. There are several market-related headlines moving markets today, so let's get right to it, and thanks for watching. Our first topic of the day, initial claims below 1 million. It's the first time that we've seen initial jobless claims. This is the week of August 8th. 963,000. Now that's 900,000 people that are still claiming unemployment insurance. Which is not a good thing. But at the net result is we had several different, Dow Jones Industrial Economists estimate 1.1 million. So you got a delta there about 230,000 below the estimate, and that's making Wall Street sort of mixed bag today, but it's a positive number. S&P futures changed to the positive this morning as soon as the initial claims came out. Also, the continuing claims is a number that we want to watch, and that is down as well. I point out the estimates versus the reality because this is that year, as I've talked about, that estimates or forecasting or modeling on anything, whether it comes to finance, to medical, all models have been wrong. And that's why I continue to talk about, let's continue to talk about the election, because there's all these polls like we saw in 2016. Will they be true to form, or will they be completely turned on their head? We don't know, but I want you to tune into our election edition this next September coming up, because we're bringing in some special guests as it relates to the election and portfolio positioning. So I'm going to tease that once again. But the initial claims, the trend is now down. We saw a resurgence, the second wave, a couple weeks back. Now it's reverse course. So the large trend for unemployment claims is now on a downward continued trajectory, which is a positive thing for markets as well as the U.S. economy. Our next topic, the S&P 500 is essentially on pace for a record close to beat the February 19th all-time close of 3386. So we'll see where we are as we close today's trading session with the S&P 500. But the reality is that you've got a lot of movers and a lot of companies that are pulling through and looking through to 2021 and 2022 in terms of earnings. And those are the survivors. That's why the S&P is down or up. And continues to drive higher, and we believe it'll continue to drive higher, maybe not in the short term because we have heightened volatility because of the election. We expect that, we anticipate that, but long term, we've got Federal Reserve right behind you with all-time low interest rates and low interest rates to come. That's going to fuel, basically there's no other place to have your money with regards to investing, because yields on fixed income is so low. And that's one of the designs of monetary policy right here, is to sort of tease out that money from the banks that are paying us nothing on our money and putting into asset classes such as real estate, such as commodities. We're seeing that, and obviously the equity market. So that's one of the reasons why we have the S&P 500. We'll see if we close up to all-time highs today, maybe even tomorrow. So again, markets are up, even though that Washington's still playing the blame game. This is something that we've predicted, we've talked about. Markets, better yet, have anticipated this. Even the Federal Reserve, again, monetary policy. So they've added additional, if you remember when I reported last week, Federal Reserve Chairman Jerome Powell said that he's going to accommodate and continue to accommodate this market and be that sort of that backstop, if you will, and the support with regards to liquidity or anything else. Well, he did that on purpose by design, because he knew that Washington would not agree. They would agree to disagree, and they're going to continue to draw this out as long as they possibly can for political reasons, maybe not. The reality is that there's many people that are in need. There are people that actually need that unemployment insurance and an extension of that. So the longer that Washington plays this game, honestly, I just hope that they wouldn't get paid while they're doing this. Maybe that might help them, not take another break or get back to the table and really help those in need, like small businesses that we all know in our local areas that need some serious help right now. So let's just hope that maybe this weekend we'll have a coming of terms or a deal. But in the meantime, markets are there, Federal Reserves to support, and initial claims are positive in terms of a story that's positively impacting the market because those claims are coming down. So that's it. That's all we have for today. Thanks for watching. We'll tune into Friday Insights. Thanks.